Greetings, traders, and thank you for joining with me today for this introduction to the Daily Directional Forecast. The Daily Directional Forecast is a newsletter I've been publishing for over 14 years in a row, and it is an excellent and vital newsletter in the trading industry because I am the first and only person in the history of the stock market to tell traders exactly where the market's going the next day with an astonishing degree of accuracy. Now, I publish these reports 12 hours usually before the market opens, so it's well before the opening bell, using my 18 proprietary indicators that I developed along the way. I'm able to give you a crystal clear forecast of where the market's going the next day. I've done video webinars a lot lately, and back in the early days we did a lot of seminars where the traders would fly in from all over the world. In fact, one seminar we had in Florida, we had over 320 traders show up from all over the globe, and it was quite exciting. I was able to walk around and talk to many traders, and I've helped train over 50,000 traders in my 14 years through our services. So I'm quite excited to be introducing you to the Daily Directional Forecast today, and recommending that if you would like to find a very easy and excellent way as an introduction to futures trading without a lot of market exposure, to come in and take a trial to my Daily Directional Forecast and learn how to do that. I'll help you set up your charts. I'll help you with everything you need through our professional service every day and our reports here, as well as our monthly webinar that you're free to attend and ask any questions that you want. I'm world renowned for my Boomerang Day Trader software, which is right here, Boomerang Day Trader, which is a scalping tool, as well as my Hyper Scalp and my Precision Trade Guide. These are some of the proprietary indicators that I developed that have become well known in the industry, and they're very important to have if you're day trading the markets. More about that later. But in our service, the High Five is one of the tools we use, and that's shown up here. You don't have to be a mathematician or anything to learn trading. Just follow my newsletter. I'll tell you exactly where to put on a trade and when it sets up. But the way we do this is I make my proprietary call each day for the direction of the market. Now here's an example of a briefing right here. Let me just bring this up. This is a briefing recently that showed our underlying 18 proprietary indicators told me the market force for that day, it's just for day trading, was neutral to bearish. What we do is we do what's called trading into a move opposite of the market force to catch the move back into that market force. Now, a lot of traders, they try to understand this. Let me explain to you in simple terms. When you fade into, which is a floor trader term, or trade into an opposite move, when you've determined the underlying market force, that gives you the opportunity to usually catch a trade and get our recommended amount of points out of the trade. Let me give you an example here. It's just like the natural waves and the force of the ocean. Now here's a surf contest here, and they've gone to a lot of expense to set up the radio announcements, the contestants out here, the surfer pros, and the gals got their bikinis on. Everybody's excited. They got their suntan lotion on. People are having some beers. It's a beautiful day out. The weather's perfect. But the one and only thing that really ultimately matters for this contest to go off is what? That's right. To have the underlying force of the ocean create waves that the surfer experts can get on and surf to compete in the contest. Well, you can see that a flat ocean here is not going to give anybody any kind of waves to get going on. Similarly, when we trade opposite the market force and trade back into it at my recommended prices, we end up becoming more like the recent surfer Carlos Burley champion, who surfed in these bone-crushing, death-defying waves. There he is there, like a little dot in this massive, almost 200-foot wall of water, and he went on to become the champion. This was just recently, in the last couple years. This shows you a similar understanding of how the underlying market force works in comparing these two in the surf contest example. No waves, no action. Similarly, in trading, if you don't have that underlying force to create a wave, it's hard to catch anything. So right here, for example, and we do this on each daily briefing, I show the exact chart that occurred that day with the briefing from the previous forecast that day that was done, like I said, 10 to 12 hours before the market opened. It called for a neutral bearish market to continue to short early highs at 1954 to 56. Now we trade the E-mini S&P 500. So you can see right up here on the chart, 1954 was the and slightly above that was the exact high, and then there was a bone-crushing, Carlos barely surfed wave to the downside where we were to capture up to 8 points on that crunch from the exact high that I again forecasted 8 hours to 10 hours before the market opened. So again, it's a unique service. I'm the only person in the industry that's ever come out and had the guts to call the exact direction of the market. I'm not saying that to brag. I'm just saying that you're getting a very unique opportunity to join our newsletter. Now here is a historic study of the Daily Directional Forecast that was done in 2010. This audited study went over 1,159 briefings. That's a lot of sessions. And it shows the line sessions as being multi-level calls like the one you just saw where we said they're going to rally in the morning, but we want to short higher up at that 1954 area. Those are double-sided multi-level calls. And you can see how that covers most of the calls we did. The green sessions were highly accurate calls that said, watch for, a slight higher open and it's short at such and such price, or watch for a lower dip in the market and then buy down there. One-sided dimensional call, extremely accurate green level, and then the yellow level is 50% accurate, where it said market's going to open higher, move higher, and then sell off. Maybe it opened flat and then sold off right from the opening. We may or may not have got a trade off in that day, but it's still a very accurate call. So you can see a 6-year audit study showing 77% near perfect or perfect calls. So again, my accuracy, I'll be glad to tell you, has increased even more because you know what? One of the secrets to trading is just show up for work every day. That really is one of the great secrets. Just show up for work, and gradually, by showing up for work like any job, you become very good at the job. Now, we have testimonials going all the way back from brokers and from clients that have been with us a long time, subscribers. You can see going back to 2003 and everything, telling us how much they like the service. And some of the more recent ones from subscribers that say here that I've been with Mohan since about 2003. They're still with us to this day, enjoying the benefits of the Daily Directional Forecast. Now, when you become a trial subscriber, you'll have access to my free special reports that I've done here. How to read the market like a book, the 3 steps to getting started in stock index futures trading, and precision day trading mindset and trade structure. I've made these special reports, and they're free for you whether you decide to become a subscriber or not. Certainly, I hope you will do that so you can join us in the webinars and learn everything you can about just kind of dabbling initially in futures, getting your feet wet, getting into the excitement of catching these trades and having a successful turnout on your trades. Now, I'd like to show you some other exciting things. First of all, this is my screen that I use up here. This is the high 5. You don't have to be a mathematician or anything, but this is the industrial average, the composite average, the TRIN, transportation index, and the advanced decline line right here. And this is called what I call the high 5. It's just a way of reading the tape. And I became well known for this back in the 2003-2004 period when I developed this table showing people how to use just these indices, which are common indices on the New York Stock Exchange, to read the market like a book every day. You can take these, and it has definitions and everything. It's all explained in very simple terms. So once again, that's part of our thing. Now, in addition to that, we encourage traders to learn trading mindset, and you can get into this as you gradually develop with our newsletter, learning the magic internal and external 7 traders affirmations that I've developed. I also made a beautiful video here, which you can enlarge, on a helicopter trip to the lovely island of Kauai, Hawaii, where we have the soaring waterfalls and everything, and you have the affirmations transposed over those for easy learning. You can watch this every day before you trade or during while you trade, and just make your life a lot more comfortable in the trading environment. So again, this is all part of our services we offer here at the Daily Directional Forecast, and the cost, hold on to your hat, the cost is about under $2 a day. That's right, to know exactly where the market's going, to receive my daily calls every day, and then my exact entries on price is just about $2 a day. Now, to make a one-round turn on a futures contract, if you're selling or buying one futures contract, a good price is around $4.25 to $5. Here's my whole briefing telling you exactly where to trade, and at the giving the direction of the market and a beautiful methodology that has worked very well for just $2 a day. Now, to show you the proof, here's some recent examples of calls that I made. This was in, you can see here is in May and June of 2014, and we have others on the site that I'll show you in a moment here. But you can see here was an example. Every chart, every day that we do a briefing has the previous day's briefing headline call printed right on the chart. The call this morning on this day was neutral bearish underlying force. We continue to watch for a stronger sell-off, but watch for a short at the 1914 to 17 zone. Small tight zone. The market opened up, ran up right off the opening, right to 1375, the early high right at the exact price zone we want to get short into, and kablamo, down they come for a nice 5-point gain there. Now again, a 5-point gain is going to give you approximately a 5% gain on margin, sometimes a little bit more. It just depends. And we can talk about that more in our special reports, explain that in great detail, so I won't go over it now, but I just want to show you these briefings. Here was our call, neutral, continue watch for shorts on higher early moves. Here was a higher early move here, and we employed the hour one breakout short method, which is explained in detail in each briefing, and I'll tell you when to employ that method. And here again, shorting them at 9 1/4, and down they come for a 4-point gain there. Excellent. These were all within about a 4-week period here. Here's another one. Same thing. The underlying force that day was neutral bearish, which it was mostly the last couple months on a day trading basis. When that's the case, we're going to short into a higher move. I said to watch for prices to hang up at the highs today, but go short at 1894. The market ran up, hit the exact high as shown here at 1894. You can go back and check this date on your own charts if you have some there, and you'll see that 1894 is the exact high, and they pulled down for up to 4-point gain there. So a lot of different calls that I've shown. Here's another one here, for example, our underlying force on this day, which is June the 2nd, 2014, neutral bearish. And all these are in the archives for you to see. Underlying bias continues to weaken as the upside price movement continues. Watch for early prices to get hit with selling 1925 to 1927. The exact high came in up here just under that zone, and kablamo, down they went. Here's another early one here where we were looking for the big news was that European interest rates expected to be lower, which would have caused the market rise, but we still had a bearish or more of a neutral market force reading and the suggestion to sell 1929. We got the opening price and an early move exactly to 1929.50. The high was exactly 1929.50, 2 ticks above the exact call we made, and down they came to 1921 for an up to 8-point gain. A couple more examples and then we'll move on. Here was one that I showed you in the briefing earlier where I had called to sell 54 to 56 zone up here, 1954 to 56. They rose up, hit the exact, again, it was a huge wave to surf to the downside there. Same thing here. We called for a trade under the pit bull, which is one of our indicators on our thing. It's very easy to read and understand. Trade under the pit bull to watch at 1935 to watch for a lower breakdown. And sure enough, the market got slammed under that 1935 level. You could have put a short on there, had a huge gain. Once again, our call this day was neutral, kind of bearish. On these examples, we've had a lot of neutral bearish type calls. They're very tradable. And I said short the 31 to 33 zone. Look at, there's 32 right there. Here's the market, ran up early right into our 31 to 33 zone here and got hit hard to the downside all the way down to 23, which price I had also forecast in the body of the briefing, which you can read if you look through the archives. I had forecasted a break down to 23. So I had forecast the high, the exact price, the underlying direction of the market, and the call to watch for that move all the way down there. And again, this is my final example I want to show you here, but look at this. Neutral bearish, continue to watch for early higher highs to get hit with selling short the 57 to 60 area. You can see right here, 60 is right on this top arrow. They went to 60. They traded right in that 58, 59 area, and a huge whopper sell-off of up to 20 points going short right around 1960. Just a huge move there. So again, I always like to show traders the proof of when I say who I am and what I'm doing, because in this industry, let's be honest, everybody's not thoroughly honest. Let me just say that. I try to be. We record and archive everything. Here's me doing some seminars, and we have all photos and copies of these. Been doing a long time, and I do webinars regularly, which you're able to attend when you become a member of our service here. So I sure hope you can join us, and we'll sure look forward to it. Join us and learn how to read the testimonials and understand what others are experiencing, and get involved in our service. I'll help you do everything to set up your charts. We got real basic chart services here where you can learn how to floor trader methods for setting up charts, real basic types, how to read those. I can help you with that. And like I said, I have some of the best indicators in the universe for trading the markets. You'll find out more about those too as you go along, or you can request information from me at any time. So if you have any questions on this introduction here, just feel free to email me at mohan@daytradersaction.com, and I'll sure look forward to seeing you in the action as one of our guest subscribers. So thanks again, and have a great rest of the day.